let's go ahead and have Jamie and Thomas come on up.
All right, come on up, guys. We appreciate it. All right, give them a round of applause. It's hard to get these brokers. These guys are busy. They're really busy.
These guys are busy, and they don't like to come out after 4 o'clock and do work. All right, so here you guys can sit on the side, and I'll sit over here. All right, so thank you guys for coming on out. Let's see. So first of all, before we kind of kick off, I do want to let these guys introduce themselves. I think they will do a much better introduction on themselves than me. So I guess with that said, you want to introduce yourselves, the brokerage you're with, and kind of maybe where you grew up.
Hello everyone, hello. My name is Jamie Harrington. I'm from Houston, lived here for about 30 years. Work at a company called National Apartment Advisors. We're a local brokerage firm here in Houston, started back in 2012, and that's pretty much it.
All right, and where'd you grow up?
I was born in Nashville, Tennessee.
Nashville, Tennessee. All right, thank you, Jamie. Thomas.
Hey y'all, how you doing? I'm Thomas Alleman. I work with Newmark and married, have 3 kiddos. I've been with Newmark since 2010. Been with a lot of the same partners throughout that ride, and love doing what we do every day. So, and I grew up in Houston with a short stint in Alaska when I was in 2nd and 3rd. And yes, I have been chased by a bear. And I live to say that.
All right, there you go. So those are your introductions. And so, you know, with that said, I think the big elephant in the room is just what's been the activity you guys saw last year in Houston, right? Both of you guys have been doing this for quite a while. You all remember 2016, 17, and 18 and kind of what that looked like. And fast forward to 2020. Right, how would you guys compare the two? I think that's probably the big question that I have, and I think other people have, and so would love to kind of hear each of your thoughts as to just what's been the change and what do you, that will lead to my next question, which is what do you think the outlook looks like?
So, 2021 in a nutshell. 2021 in a nutshell was, I think, the best year all brokers have seen in Houston. It kind of ties into multiple things, mostly the availability of capital and pent-up demand, but rent growth in Houston was insanely high. I think 16% is what you'll see if you look, and I said that clearly, 16% rent growth in Houston. I think most people market or write down in their underwriting 3%, but we had 16%, so the pent-up demand from the previous years with COVID and the availability of capital, along with the rent growth.
And so 16% rent growth, and you think that's just what led to people being a lot more interested in Houston?
Well, with, yeah, a combination of that. Also, supply and demand. Houston's traditionally been between 88 and 89% occupancy. I think we're at 92% right now. So I think it was 37,000 units absorbed in 2021, in the last 12 months. And we only put 16,000 out. So that means we had an additional 20,000 units absorbed throughout the B and C and A market.
And who here likes rent growth? There we go. We all like rent growth. Why? Because as the brokers like to say, it's the fundamentals and it supports the pricing that we're seeing, right? And so Thomas, you want to go ahead and kind of give us a little bit of just what you've seen as well, and you know. Yeah.
So, I guess if I was to compare 2020 to 2021, I think my daughter said it best at the dinner table. She said, "Daddy, remember last year you had no deals to sell, and now this year you have a lot of deals to sell?" And that was pretty much a good summation. I think we did about $7.5 billion as an office this year, and we did about $900 million last year. And probably our best year was $3.2 billion in 2019. So it just speaks to the amount of volume that was done this year. And a lot of that was fueled by, you know, interest rates being so low. And I think Jamie said it well. You had a lot of migration to Houston and a lot of rent growth. And I think the positive thing is the new supply pipeline it looks a lot lighter than it has historically. So we feel like 2022 should carry a lot of the same momentum going forward.
One of the problems is a ton of stuff got built in 2016, and then oil hit, and so kind of a double whammy, right?
Yep.
So hopefully, not as much supply coming online, and just kind of more, what we like to say, more stable growth versus kind of the ups and downs that I think we did see historically. So do you typically vent to your daughter?
Absolutely. She's the only one that listens to me.
Good to know. So I guess, so with that said, right, who are the buyers that you're seeing, right? And how has that changed? And you guys really, I think you guys focus on different asset types as well. So it'd be good to hear, A, what type of asset that you're focused on, right, for the audience to know, and then B, who is the buyer of that asset type previously, and who do you think that has been kind of last year and moving forward?
So a lot of what I'm involved in is 1990s and newer product. We do suburban, we do urban. We only do Houston, so I can only speak to Houston. I think you do outside of Houston. But I would say, from a buyer standpoint, it's really been all across the spectrum. I mean, we've still seen institutional capital be active in Houston. It's probably been more active in the suburban than the urban, but that's been a good thing to see. You've seen a lot of DST money, non-traded REIT. I mean, a lot of private capital. Really, I mean, that's been the most exciting thing, is to see the amount of private capital that's been able to be active in Houston, I would say.
And have you seen an uptick of the institutional equity, or do you feel like you're not having more conversations with them, you're just having the same quantity of conversations?
Yeah, I would say from the institutional side, you're definitely seeing more groups enter into Houston today than there were 6 months ago, and then where there were a year ago. So it's definitely kind of sped up. And, you know, obviously the Houston, or the institutions, they're always backward looking, and so they need to see rent growth before they actually move, versus more entrepreneurial groups who can kind of see where the puck's going and go get it beforehand. And so I think that just speaks to, you know, the fundamentals being good in Houston from that standpoint.
Jamie?
So we focus mainly on, you know, B and C, but we sell everything. If it's an apartment, we'll sell it, and we'd love to sell it to any of you as well. We're not here to sell anything. We're just here to talk and teach. But
we'll email out both our contact information if they want us to.
Mostly, it's private money in our case. Although a lot of institutional, we have meetings weekly with institutional groups, and that's, you know, 2 years ago we might have had one meeting with an institutional group a month, and now we might have 3 a week. So there's a lot more moving into Houston, and it could be a growth of our company as well, but it's a combination of those things, and the institutional guys follow the money, and we already established that there's just more people moving to Houston than there are anywhere else, and it's our economy, a friendly place to do business, which thank God we live here and we're part of it. So that's what we're seeing.
Number one population growth from here to 2025. So that's what's attracting a lot of people. But I think that's a good segue to my next question, which you kind of said you're starting to see more institutional money have conversations about the BC assets, right?
Sure.
What have you seen though in cap rates, right? Because part of my hiccup is the cap rates have really gotten so tight between A, B, and C. Right. So, you know, what is the perception that you're seeing with those guys and where they're focusing now?
Yeah, I mean, I don't even know what a cap rate is. Out of recent knowledge, people might ask about cap rates, because really everything right now is price per pound. You know, and you're right, there is not much difference between the ones. It's really what you think you can go in and do to the asset to get the return for your investors that are going to give you the money to buy the property.
And what are the typical cap rates? Let's say, what was a cap rate for you in 2019 versus same asset today? What would you value that
Let's
at?
go with a C asset in the suburbs of Houston in 2019 was probably 5 3/4, maybe 6, and now it's 4, maybe
4, an occasional 3.5.
3.5. It just depends on who's doing
So
the underwriting.
you've seen a big fluctuation in your space, right?
Say that again?
You've seen a big fluctuation in your space.
Yeah, since
right?
2019
Yeah.
to now.
And so then the same question to Thomas, right? Kind of what have you been seeing in terms of cap rates in this space, and have they fluctuated as drastically as they have in that BC space?
No, Class A, I mean, it's been a little more stable. I'd say in 2019, cap rates were anywhere 3 3/4 to 4 1/4, and then maybe in 2020 they popped up to 4.5 to 4 3/4, and then, but now you're seeing them anywhere as low as a 3, but mostly kind of mid-3s. So you've seen maybe 75 bips of movement, not 275 bips, but I mean, it's, yeah.
You guys are saving the 5 caps for me?
Yeah.
So I guess with that said, I think the next question people probably want to know is, you know, Houston as a whole, right? Very big city. What are the areas that attract you the most right now? Right? Not on just one. Pick your favorite 3 pockets of Houston, right? And if you had, you know, $5 million to buy a deal cash today, where would you buy? What are the 3 areas you'd buy it and why?
So I'd say probably my first spot would be anywhere Montgomery County, just because you get tax advantage, you get a little bit of insurance break, and it's just a more conservative tax. And that's where a lot of the population growth is. I don't know if y'all saw the U-Haul article that came out that said Conroe is one of the fastest growing county, places. Then I jump infill and go Heights, Washington, and I just think because that's where the bodies are moving. I mean, you're seeing people vote with their feet in where they want to live, and maybe a third is the medical center, just because the supply pipeline is pretty muted, and you have such a huge demand driver coming in TMC3 and obviously Levitt Green. But those would be maybe my 3.
I'm surprised you said Washington. There is so much product. Every time I drive around, I'm just like, man, there's like a new monster project every other corner.
Same thing with the Heights. So probably my top 3, I think, barriers to entry are huge. Sugarland would be somewhere, if I were investing my money, I would want to put it, although try and find something there is very, very difficult. Same thing with Kingwood, per se, trying to find something at Kingwood or
so you're still very bullish on Kingwood?
I'm absolutely.
One of our hottest deals that we have today is a deal we bought at Porter. I mean, and we're getting like 38% lease right now.
I love that. Now, Porter may be a little easier to get into than Kingwood per se, but if you could buy anywhere in that area, I think New Caney has one of the fastest growing, just like Conroe. Not many people probably know New Caney, but it's got some of the biggest developments in the city of Houston going on.
Who here knows where New Caney is? Few people. Northeast side.
10%, not far from Porter, very close.
Yeah.
So, and then I've always been bullish on Spring Branch, really where all of you want to live, everybody really wants to live. So Memorial, Spring Branch, lots of restaurants, lots of things to do, a great place to raise your family.
See, I'm kind of torn on Spring Branch. I don't know what to think of it yet, right? I'm still kind of figuring that one out, and just seeing that transition has been interesting to say the least. There's a lot of product out there.
Right.
It's insane to me how many apartments were built in the 70s out there at one given point in time.
60s, 70s, yeah, I mean, it was really a lot.
Got it. And so then I guess, so with all that said, what do you think kind of 2022 looks like, right? In terms of, do you think it's going to keep the momentum of 21? It's going to get hotter? Do you think it's going to stay flat? And maybe I'll also add to that, what does each of your pipeline look like for January and February compared to last year?
So, from a pipeline perspective, it's hard to keep one. It's all under contract or going under contract, which is great for the broker, but not so great for the buyers. But just about everything in Houston is for sale right now, so if you want to offer on something, find your favorite broker and go offer on it. Because the prices are going up, and sellers are seeing that, and they're willing to look at offers more than they have been in the past. And what was the second half of the question?
Second half of the question was...
What do I see in the last?
Yeah, just kind of... What do you think the outlook looks like for 2022?
So I think 2022 is a lot of the same. It's probably going to be very similar, perhaps a little lighter, but it's hard to say that. I think there's 14,000 units in the next 12 months coming online, and we had 37,000 absorbed. So that just kind of tells the story. If we're at 92% occupancy, which is the highest Houston's ever been, and we're at 94% by the end of this year. Where do rents go there? We have another 16%. By the way, the 16% you're seeing from the services CoStar apartment data is probably not even accurate because they can't even keep up with what's actually happening.
2 months old.
Right. And so I think that we have more units come online in 2021 than we do in the next 12 months. So I think it's just a product of supply and demand.
So rents are going up.
Yeah, I would say as far as pipeline goes, I think we have about 30 deals launching between January 1st and February, first week of February. So it feels like the pipeline is still really robust, but you are kind of looking around like, what else can sell this year? I mean, it feels like everything sold last year, and but as far as outlook goes, I mean, I totally echo that, and especially as you're looking at lease trade out reports, you're still seeing strength in lease trade out reports, and those are a good indicator of rate growth, and you're still seeing strong volume. And typically the fourth quarter in Houston is very seasonal, and you start to see kind of a let up in rate growth or maybe a dip in occupancy, and it hadn't really felt like people have seen a whole lot of that. Maybe there's been a little bit in certain pockets, but overall, lease trade out reports have remained strong.
Awesome. Well, thank you guys. So let's see, who has questions? I want to open up the questions. I don't want to hog the mic for myself. Shanna, do you mind maybe passing around the microphone? But you can go ahead and just tell me your question. So with all the institutional money coming into Houston, how do local entrepreneurial firms submit an offer that has a chance of winning when they might be priced out by bigger pockets out of another market?
So I think first and foremost is establishing trust with the broker, right? Like at the end of the day, if a broker's sitting there and saying, all right, I'm going to work with institution, which is in some ways a safe pick, but I would say in some ways isn't, and I'll get into that in a little bit, but I think a lot of it is giving the broker a reason to really push it in front of the seller and fight for you. And I think a couple ways that you can do that are, non-refundable money, right? That speaks a lot of volume. And just being because the institutions, they very rarely do non-refundable money, and they'll put a deal under contract, and in 30 days you'll know whether they want to buy it or not. And I think that's one of the most disadvantageous things that they do. Whereas institutional money, for years, it used to be, well, we have money in the bank, and that's why you should pick us. And that was, for years, why so many sellers felt comfortable with it. But they go 30 days without any non-refundable money. And I think that's probably, first and foremost, just the best way you can show a broker that they can almost put their neck on the line and say, you need to go with this group, this individual. And then of course also it's track record, and I know sometimes that's the chicken and the egg, right? Like, hey, this may be my first or second deal, but you gotta trust me. And so I think a lot of that is just giving the broker trust that, you're not gonna make them look bad.
And I think Thomas is saying it a little bit nicer than I would. I'll say what he wants to say. Be someone that they can trust, get to know them, get to know that he did a stint in Alaska and he talks to his daughter to go vent, right? Build a real rapport with the broker, right? And give them a reason to go to bat for you, right? I mean, that's ultimately what it wants to be. They don't want to deal with people that are a pain in the ass to deal with. They want to deal with people that do what they say they're going to do, period, right? And so if they're going to take that chance, make sure that you've given them all the reason to kind of stick their neck out on the line, right? First, they got to know you, right? You do business with people you like, know, and trust. And then the last piece of that is perform. So that's how I'll put it. Jamie, you want to add anything to that?
I mean, I think Thomas mentioned it very well, and he summarized it really well. You really do have to build that relationship. I talk, use Ferris, he's right here, it's easy. I talk to Ferris and Ben weekly, and sometimes 2 or 3 times a week, and we know where each other live in the part of town. We know how many kids each other have. It's building these relationships. You're damn right I want to sell the deal to you instead of an institutional group out of New York, but I have no clue. It's not about whether or not we close the deal. It's about whether or not we're going to keep doing business together going forward, and I'm going to go fight for the group that I know versus the group that I don't know.
And the group that will come back and let you sell it too.
Absolutely. We obviously want to sell it again.
Any more questions?
Hey guys, so I have a quick question. Have you invested in Puerto Rico, or will you invest in Puerto Rico?
I personally have not, and I don't know much about Puerto Rico, just kind of focusing on Texas. I can't say much about it. I do have some friends that live there.
I live there.
Do you? And I don't know much about the multifamily. You're probably the expert in the room on Puerto Rico, I would assume. But if the fundamentals, the rent's growing, and everything's moving in the right direction, I would definitely invest in Puerto Rico.
Yeah, I've invested in the stock market, and I haven't really invested in a ton of real estate, so Puerto Rico hadn't made it there yet, but I totally agree. I mean, I think, love to hear what's going on there, and obviously the opportunities. So. Yeah.
Any other questions?
How does somebody 17, 18 get started?
So, and are you asking about in buying real estate, or in what capacity? Like get started buying single family, multifamily, anything? Gosh, you know?
Talk to everybody in this room.
No, that's exactly what I was going to say. Going out to things like this.
And go do an internship or whatever it takes. We've done internships and had young folks come in there and work in our office, but that's probably what it takes. You've got to understand the fundamentals of what this particular group, multifamily, is before you can go buy it. I don't know, but
we say this all the time. Multifamily is a team sport. Figure out a way to add value to somebody. Right? Even if you're 17 or 18, you probably will go out there and hustle deals a lot more than most people. So figure out a way to do that and bring that to someone else. Yeah, you've already taken the first step. You're here. Most people don't even do that.
By the way, I love the sweatshirt. Little Aggie.
We'll let that slide.
But no, I think also don't feel like you got to go do it on your own from the get-go, right? Like working for someone isn't the worst thing to start out, and really get to learn a lot about the business, finding someone that you can work under. And to Ferris's point, I think just hustle the crap out of it and help others. And then you can maybe pivot off to your own. That's probably the safer approach, but I would think, otherwise just start doing it, and that's, throwing yourself in the fire, which, you can learn quite a bit, right?
All right, we'll do one last question, then we'll call it a wrap, right up here.
So with what's happened with Zillow and other markets around in the Houston area and Texas, where do you realistically see Houston and other markets like Dallas, San Antonio, Austin, and other surrounding areas? Where do you see those market and the trends going for this year? I mean, everyone's talking about the crash and what's happened with Zillow, but it's not a matter of if the crash is happening, but when the crash is happening. So where do you see the markets going for this year in residential and multifamily?
Yeah, residential, I have far less experience. I mean, the only thing I can speak to in Houston is the inventory levels are so low. I mean, I'm sure anyone here in residential could speak to that. I mean, I think the average housing inventory is like 2.1 months, and typically it's around 4 or 5 months inventory. And so, I mean, you got to think there's just such a shortage, and you're seeing so much migration in Texas that I find it hard to believe that there's going to be, I mean, to me, the only thing that would quote unquote blow it up is, interest rates rising and debt. Exactly. Like, that would be the metric that I would keep an eye on, and if interest rates start moving heavily, that's going to put a lot of pressure on the system, if you will. It feels like friends in Austin and Dallas are still going through insane bidding wars, and I think as long as the job markets are healthy, I mean, I've seen in Austin and Dallas, they've already recovered kind of pre-COVID job counts. In Houston, we're at about 80% there from pre-COVID levels, so it feels like you still have a lot of job potential left in the Houston market. But if anyone can answer that question, I would love to know, just so I could give you all my money.
You're taking it out of the stock market.
Yeah.
All right. Well, then I guess we can go ahead and call it a wrap. But one last thing, how can somebody get a hold of you, each of you?
You can come up to me, ask for my number or my email, or you can go to Newmark's website. And the nice thing about having the last name Alleman, it's like the first person at the top of the webpage, so it's pretty easy to find.
Same thing, nationalapartmentadvisors.com, I think. I think that's it.
All right. Well, thank you guys very, very much. Really appreciate you guys taking some time out of here. Go ahead and call it. Thank you all for coming back out. First Thursday of every month, and we do have our big conference. Whoever doesn't know about it, Multifamily Investor Network, February 12th, 400 or 500 people will be out there. Awesome guest speakers, these guys as well, their teams. And so definitely look forward to seeing y'all there, mfinvestornetwork.com. Check it out, it should be awesome. Thank you.